With only 5 days remaining until the monthly candle close, Bitcoin is in a tricky position. However, all hope is not yet lost for the bulls. In today's video, we're going to be discussing the two most important levels you should be watching moving forward. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the macro charts, talking about Bitcoin from a technical and structural perspective, moving into that major monthly candle close in just over 5 days. We're also going to be breaking down the smaller time frame price action, talking about the two most important levels the bulls do need to defend if the uptrend wants to continue. We're also going to be discussing the Federal Reserve interest rate hike and what that has done to the markets. Before we get in, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, data, technical and structural information, relevant economic news, and news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, the economic news, and Bitcoin as a whole. If you're interested in trading, you can join our trading channel. We post exact entries for trades with exact targets, exact top stop losses, and trade justifications to go along with it. Absolutely huge profits in this channel. You can find out more information via the pinned comment in the free channel. Go to the top, click the information, you can find our entire trading track record. Not only will you get access to that VIP group, you'll also get access to our group chats with all of our members who are trading, learning, educating on a daily basis. Go ahead and check it out. Let's get into the video, starting off with the market data. So as we know, we had a pretty volatile last 24 hours. Bitcoin has pretty much done exactly what we anticipated on the smaller time frame. If you were here yesterday, watching the video yesterday, we anticipated a move towards our upper range of around 26,000 upon that release of the Federal Reserve FOMC news. We actually expected a move into this level, followed by a rejection, which we have now seen. So perfectly played out. Again, if you followed that, if you watched, if you paid attention, and you profited, congratulations. It was awesome to see the market follow what we expected and follow the charts and data. So we have seen a relatively volatile move. But in terms of volatility, volatility is still quite low for Bitcoin. Looking at the volatility index, we can see that volatility hasn't really moved up all that much on the 30-day. In fact, it's moving down, and on the 60-day period, we can see it is still moving sideways. So overall cryptocurrency volume volatility is quite low at the moment. Looking at our overall volume for the last 24 hours, 63 billion plus 24% in the last 24 hours. Again, with these news events, with these high impact news, we do generally see a little bit more price action than we usually see on a standard day. Looking at 24-hour liquidations, it is up 16% at 51 million. Moving into the liquidations, we can see the majority of those liquidations came from short positions, as we did see a little bit of a short squeeze toward the upside, as a lot of late shorters were entering the market after the breakdown of that higher time frame consolidation range. If we take a look at here, we had that high time frame consolidation between these two horizontal levels. We had that breakdown, and a lot of people were entering shorts right down over here at support. Again, people entering shorts at support and entering longs at resistance. You have to do the opposite, of course. It's easier said than done, and it's pretty obvious stuff, but the majority of people are trading on emotions, so they're generally going to be wrong. Let's go ahead and take a look at the DXY. The DXY saw a little bit of a pullback upon the news, and there's a reason to that. As we've said yesterday, the most important thing in regards to the interest rates was not the interest rate itself, but the narrative and tone that was set during the Federal Reserve meeting. Essentially what they did say is they no longer expect a recession, and they're likely to continue to battle inflation, but there was no indication of aggressive future rate hikes. But at the same time, there is no indication of them not doing aggressive future rate hikes. They're very much giving us no information, sitting on the fence, and essentially not doing their job. Their job is to inform us with what is happening, and they're not doing that. They're sitting there saying, we don't know, we're not saying anything, it could go either way. So it sends the market into a little bit of this confusion phase where we don't really know what they're going to do. We don't really know what they're going to say. We have to trust the charts, trust the data, and watch the key structural levels on the technical levels and on the charts, okay? We're watching for these key levels. But all in all, pretty much a non-event, right? We saw a 25 basis point hike. That is, of course, to some degree, relatively bearish. But if we're looking at the broader context, a single rate hike means nothing if we do anticipate the future rate hikes to be smaller and smaller and smaller and eventually still lead to a pivot. Then the context is still going to be bullish. So right now we did see a little bit of a pullback on the DXY, not too insane over here, not too unexpected. Looking for the stock market, they're still slightly moving upwards. And again, if the stock market does continue upwards over here, we are going to see potentially money being dragged out of the stock market as people take profits when they go back and they go spend that money into the economy, and inflation might rise again, and that could kind of reset the cycle. So we're watching all of these key levels, watching all of the data, and we're definitely paying attention to the upcoming inflation data and leading indicators for inflation, such as personal spending, such as PCE, such as job data, such as NFP, all of this stuff coming within the next 2 weeks. Very important to set the narrative and tone in regards to the likelihood of then either dropping rates or continuing to rise rates. So very much so a non-event, very much so indecision, and very much so confusion has been spread in the market. But let's go ahead and discuss the facts and the charts. Starting on to Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So in the intro of the video, we did mention there are 2 key levels we want to be watching on Bitcoin right now. Those 2 key levels for the bulls are going to be this major level of support at 28.4K and this major uptrending support level represented by our diagonal uptrending support line. We're going to be breaking down exactly why these levels are important and what they mean on the macro chart. Furthermore, the damage Bitcoin will undergo if these levels are lost. But before we do any of that, let's talk about the immediate short term and discuss the next immediate move for Bitcoin. So as you know, Bitcoin has been moving in this overall downtrend. We have seen a breakdown of this higher time frame structure, which of course was that high time frame horizontal channel. We were consolidating in this horizontal channel for about 30 days, a little bit over 30 days, eventually seeing an overall breakdown, and our breakdown moving into this VRPV gap, actually filling at that first area of support. That first area of support being the 29.2 to 29K level. At this level, we anticipated a bounce / consolidation, which is exactly what we have seen. This level over here represents an area of which between our trigger point for our bears and our high time frame support, an area of higher historical orders. If we have more trading orders, we have decreased volatility. If we have decreased volatility and momentum moving into support, there is a higher probability of a bounce regardless of what the news is going to be, and therefore we anticipated a bounce and we saw that bounce play out. The bounce played out perfectly and it went up to 9.6K, which of course was the lower level of liquidity of our prior cluster of consolidation prior to the breakdown, right? We had this cluster of consolidation and then we had this overall breakdown. Our lower level of liquidity was these areas of large wicks at the support. So we had seen that play out. Currently, we are in an overall downtrend for Bitcoin on the hourly charts. The hourly charts are suggesting we are in a downtrend while we remain below this downtrending diagonal resistance. A very, very important level to be watching on the chart moving forward. If this downtrending diagonal resistance is able to be broken, we are likely to continue upwards to retest that POC level. If you remember, the POC level at around 30,300 to 30,400 is actually not only just a POC, but it is the bullish trigger for a continuation back upwards into this higher range. So for the bulls to reclaim control, they need to do two things. Number one, they need to break the price above the downtrending resistance and have enough strength to push the price through 30,400. If that occurs, we would then be expecting a rally back up to around this 32k range. We'll discuss that later in the video. Until then, the downtrend is intact and the downtrend is very, very valid and very real, and the price shall continue in this downtrend toward our next support at 28.4k, provided the downtrend does not break toward the upside before we do reach that target. Let's go down to an even smaller time frame and discuss what is happening. So on an even smaller time frame over here, we're looking at our 15-minute chart. We have a few things occurring. Actually, we'll go to a 30-minute chart to make it a little bit easier to see. We have a few things occurring. What we have here is a rising channel formation, and sometimes the rising channel formations can be a little bit hard to see, especially when they're as sporadic as this one. We have these large wicks, so I like to draw it into two. We have this lower section of the rising channel over here, where there's clusters of consolidation. And then we have these high points up over here at these levels of resistance, indicating these high points of consolidation. Overall, the current short-term structure is representing an uptrend into resistance, right? We have an overall uptrend into resistance. For the move to continue downwards, we need to lose the 29k level. The 29k level, as just shown before, is a huge level of support on the current chart. And on the smaller time frame chart, we can see, according to that VRPV, we start to drop off anything below around 29.2, which by no coincidence is the upper level of support of our current horizontal support range. This area between these two levels are support. Looking at the VRPV, we can see a drop off below 29.2, and that steadily falls off a cliff below 29k, indicating the price below 29k is an area of low historical resistance. It is a low resistance range. It is an area of which volume does not need to be high for price to move volatile. Okay, the price will drop very quickly and very aggressively, as we did over here, below this level if the price is able to push down. So when will we confirm a breakdown of 29k? Obviously, the answer is in the sentence. We will confirm a breakdown of 29k when it occurs, but we can actually find a point of which on the chart, the probabilities of a breakdown to 29k increase. That will be the loss of this current uptrending level. Put a little arrow over here. This is our uptrending support line. If we lose this uptrending support line and break below this little peak on the VRPV at 29.2, we are very likely to retest 29 and very likely to break below it. So if we're watching for the bearish scenario to replay and play out again, or the continuation downwards to occur, we are watching for a loss of this current range. We're watching for a breakdown. Remember, if we do break down from this level, we can look at the measured move. The measured move will take us sub 29k. And you already know what we said, guys. If we go sub 29k, we're pushing into that 28k range, most likely pushing closer to 28.4. So watch out for that. We've talked about the short-term bullish. We've talked about the short-term bearish scenario. Let's go ahead and zoom out and discuss those two key levels and why they are significant. So, number one, 28.4k is absolutely paramount. That Bitcoin remains above it for the bulls to reclaim, or should I say, hold weekly strength. Now, this is the thing. The weekly uptrend is not lost when 28.4k is lost. The weekly uptrend is lost when 26.8k is lost. The daily uptrend is lost when we lose 28.4. When we lose 28.4, the weekly strength flips from strong weekly to negative weekly or weak weekly. We go into this weak weekly downtrend, okay? So let's take a look at this chart over here really quickly too. if we're looking at the overall trend for Bitcoin, the trend for Bitcoin is technically upwards until this uptrending support level has been lost. So the uptrending support level gets lost, then we enter a weekly downtrend. But we can see, like I said before, the weekly strength shift bearish before we see these breakdowns occur, and we actually do usually see our metrics, our indicators, momentum, velocity, volatility, volume indicate weakness before we see these breakdowns. So as we'll be watching, and we'll be watching for that in just a moment. So let's go ahead and take a look at this 28.4K level first. Why is this level significant? First and foremost, from a structural perspective, this is going to be a huge level of demand on the charts. We can see these huge levels of rejections and therefore huge levels of demand. A loss below this level will classify this whole area as deviation and likely push the prices back downwards. Furthermore, a loss of 28.4 will result in the price falling back underneath the upper band of the Gaussian channel on the weekly chart, which will signify a shift in weekly strength. If we see a shift in weekly strength on the weekly chart, there's a higher probability that the price will continue toward the downside and break below this uptrending support. So 28.4K, a loss of 28.4K is when the probabilities of a continuation to a breakdown of this uptrending level increase over a continuation upwards. So right now we have two possibilities. Obviously, number one is a continuation upwards. Obviously, number two is a continuation downwards, right? Very obvious stuff. Those are two possibilities. Right now, while the price remains above 28.4, the probabilities remain in favor of an eventual bounce and continuation upwards. If we lose 28.4, that's when the probabilities shift slightly in favor of a continuation downwards. Again, nothing is certain in trading. Everything is a game of probabilities. Your job is not to be right. Your job is to assess the data, assess the structures of the charts, assess what buyers and sellers are doing, assess the overall economic conditions, and apply probabilities to certain moves based on calculated, risk-managed positions and ideas, guys. You're not here to be right. You're here to make money. Focus on what the data is saying, focus on what the charts are saying, and make calculated and educated decisions based on that, keeping in mind your risk management and your risk tolerance when doing so. So when we're looking at the probabilities of directions, we can say the probabilities shift in favor of a breakdown when 28.4K is lost. The breakdown is confirmed once the uptrending support line is lost. Until then, Bitcoin is actually still in a uptrend. However, the uptrend is weakening, guys. There's nothing more to say. The uptrend is weakening. Okay, so let's take a look at that smaller time frame again and discuss from a technical perspective what we're really seeing on the chart. So we'll go ahead and delete everything off here to make it look a little bit easier to see. At the moment, like we said, we've already told you from a structural perspective what we're expecting. Let's go ahead and bring up some technical indicators now and discuss. First and foremost, we'll start off on that RSI indicator. So the RSI indicator is right over here. We're looking at that respective downtrending resistance on the 4-hour chart right over here. If we go ahead and draw those respective lines on the RSI, we can see the RSI trend line is over here. Therefore, we are on a downtrend and we are underneath our key supports. But most importantly, the momentum is negative, right? The momentum is underneath this trend line, and therefore we have negative momentum. A break above this trend line plus a break over this trend line will validate not only have we had a positive momentum shift, but we've also had the break of the trend, and the probabilities of a continuation upwards come back in play. If you're watching for a continuation upwards, watch that RSI, watch for a momentum shift and a breakout for the continuation upwards. Perfect. Okay. Until then, momentum is technically still bearish on the 4-hour chart. Let's go over to the daily chart for the momentum. Looking at the daily chart on the momentum, guys, over here, we have one thing I want to point out, and that is going to be this uptrending level on the momentum chart right over here. Again, this uptrending level, once again, corresponds with an incredibly important level on the chart, which is going to be this uptrending support line we drew in before. Again, the momentum has not shifted negative yet on the daily chart, and therefore the momentum is still technically positive on the daily chart. However, It is weakening. This is weakening momentum. This is weakening positive momentum. It's positive because we're in an overall uptrend, but it's weakening as we are in a downtrend on a smaller time frame. So weakening positive momentum. If the momentum flips negative, the probabilities of a continuation downwards increase significantly. Watch out for that as well. Let's go back to the smaller time frame now and discuss another indicator. Let's go ahead and bring up our open interest and our CVD. Okay, let's bring it up and zoom up a little bit. So very much the same thing over here, guys, for the CVD. The CVD is very much indicating these same levels, and we're really watching for the CVD to take out this local high point to really indicate a shift in volume. So we're looking for a shift in volume as well. We're looking for this local high point of the CVD to be taken out if the price wants to continue upwards. Looking at the open interest, again, we're not really looking at any key particular levels being taken out, but we can see we have overall structural consolidation over here between buyers and sellers. We have exhaustion, we have consolidation. The direction of which this does break will kind of shift the market in that direction in terms of strength. So we are watching for that for breakdowns or continuations upwards. I think I'm gonna go ahead and leave it there. There's not really too much to talk about. We've talked about everything I want to go over. Short term, macro, technical levels, structural levels to watch, and key triggers to watch. Everything has been outlined for you on the higher time frame. You should be very well equipped and well prepared to understand what is happening and act on what does occur. In our next video, we'll focus a lot more on the 4-year cycle, the macro weekly charts, the macro weekly technical levels, and of course discuss that awesome and very important monthly candle close, which is coming up. Thanks for watching. I hope you have a great day, and I'll see you guys in a video tomorrow. Cheers.